What's up guys, Ben here and welcome to Motivation to Invest. Today I'll be diving into a stock in the green space. Now YouTube doesn't like me to say the actual word for this substance, so I'll just be calling it the green space. So let's dive into the industry growth. So the green industry was valued at $17.7 billion in 2019 and is expected to expand at a staggering compound annual growth rate of 18.1% over the forecast period. Now, I've not covered this industry in the past, and that was due to three main reasons. The first being the substance is a commodity. The stuff literally grows on trees. So as far as I could see, there was no unique selling point or competitive advantage by investing into all the different companies in this space. The second reason was regulation, which was ongoing and ever changing. And the third reason was hype. There was a lot of hype behind these green stocks a few years back, and I did see a major bubble and I decided to sit on the sidelines. And I was happy to do so as many of those stocks crashed. But now I've discovered a new company which is a different type of play on this industry. So it still takes advantage of the massive growth in the industry, which we've seen is at least 18% per year. However, the company doesn't actually sell the green substance. So it's a completely different play on this industry. In fact, this company I'm going to be covering in this video is a new SPAC, which is a software company. So this is going to be a really interesting video, guys, and you're not going to want to miss this one. But before we dive in, if you're new around here, why not join the investing family by hitting that subscribe button and turning that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. Also, if you want to take things a step further, then feel free and click the first link in the description to be taken to the Patreon page. This will introduce you to the VIP membership and inform you of all the details of that. Basically, you get access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire six-figure portfolio. Now, there'll be more on that later. So with that being said, let's dive in. So what's the name of the stock? Well, I can't actually name the stock, but I can point out the logo here, and I can also say, instead of the WMH, we'll just replace the W with the word green. So it's Green Maps Holdings. Or in this video, I might be calling Maps, and I'll call the industry the green industry. So hopefully that doesn't confuse you guys too much. You know what I'm talking about. And also, like all my videos, this is not financial advice. I'm just introducing this company for you guys as a starting point for you guys to do your own due diligence and research before investing into any stock I mention on this channel. With that being said, let's get into it. So W Maps is a software as a service business in the green space. They offer a mapping service for green retailers in addition to a business in a box functionality, which ranges from integration supporting product menus. They have online order ahead, delivery order, fulfillment software, data analytics, a point of sale solution, and even a wholesale marketplace. Now, one unique thing about this company is they've built in compliance by design. As you know, the green industry is heavily regulated and the regulations are always changing. So with their software, it's actually built in this compliance for retailers. For example, in California, as a retailer, you have to have real-time tracking for all your drivers with a sort of track and trace style system. Now, this can be all done with the W Maps app. Now, this business is a two-sided marketplace, with one side being the customers and the consumers, and the other side being the retailers. Now, the company plans to go public via a SPAC merger with the company SSPK, Silver Spike Acquisition Corp. So we'll start off with the positives of the business, and then we'll dive into the risks, because this is quite a speculative play. So first positive, growing industry, we established that earlier. Second positive, software as a service business. SaaS businesses are known to have high margins and recurring revenues, which are two favorites for investors such as myself. So this company charges green retailers $500 a month for the entire business in a box service, which includes point of sale, analytics, and many, many more features. Now, this may actually be a lower cost than trying to buy all the different parts for their business individually and the complexity of trying to put all that together. The company also includes product specifications and reviews to help categorize the complex products in this industry. As I've been told that certain types of these substances can make people sleepy and certain types can make people alert. So the consumers want to know exactly what they're buying. And with a company like W Maps, they can establish this by collecting a vast amount of data. So in terms of the competition, they seem to only provide single point solutions, whereas W Maps offers an all-inclusive business in a box solution. And on the platform, the average order value per customer is 2 times what they would normally spend in store. So usually the average customer spends around $50 in a store, but on the platform, the average customer spends at least $100. So the company has a 12-year operating history, 400 employees, operating in 9 countries with listing pages, over 10 million monthly active users, and over 18,000 businesses currently list on the platform. The company's revenue has been growing at a massive compound annual growth rate of around 40% per year over the past few years, which is also incredible. Now, generally, I say revenue for a growth stock should be at least 15 to 20% per year. This has got 40%, which is massive. So this is their business-in-a-box solution. So as you can see here, they've got their app, they can do their orders, they've got dispatch facilities, they can do point of sale services, they've got restocking, and they can even analyze the user data. Now, another unique thing with this company is they state only 10% of the US population uses the substance. So on their platform, they can actually target this demographic extremely precisely, which equals much better return on ad spend for businesses. Now, the average revenue per client is also increasing over time. Now, this shows that retailers who are using their software are finding more and more features to use, and this means more recurring revenue for W Maps. And their EBITDA margin is growing at around 55%. Now, this means the company has been profitable for the past 12 years. They did have one bad year, and I'm going to explain why. Now, as you can see here, in 2019, we currently see a lot of blank spaces, and that was due to many accounts in California being removed from the platform. Now, as you know, this industry is heavily regulated, and the company decided to remove certain retailers from their platform who weren't following the proper licensing. Now, another positive of this company is it will be listed on the NASDAQ stock exchange because it doesn't actually sell the substance. So what about the risks for this company? Well, firstly, this is a speculative play as it plans to go public via a SPAC merger, which stands for Special Purpose Acquisition Company. So there's a chance, like all SPACs, that the merger won't complete. And that means if you invest into the acquisition vehicle, Silver Spike Acquisition Corp, then there's a chance that you could lose your money if that merger doesn't go through. Second, diving into the transaction details, like many of these SPACs, if you invest into the acquisition company, you will only be entitled to 17% of the final company once the merger completes. So that needs to be factored into the valuation. Now, I did an approximate valuation looking at the company's revenue. So they had a 2020 revenue of approximately $160 million. And if I divide that by their market cap today of around $2.39 billion, we get a price to sales ratio of 14.93, which isn't too bad considering all the crazy SPACs in the space and the high growth of the company, but it is still quite high. There's also a federal probe into the company which remains unresolved. This could be due to the retailers who were on the platform and they had some licensing issues. They were subsequently removed from the platform. I also saw some reviews where delivery was strangely removed from certain areas, so that's another interesting thing to check out. If you guys have used this platform before, if you're in the US or in Canada or anywhere else in the world, then feel free to comment your thoughts below. I'd love to hear from you. Now, the final risk I can see is I watched through the entire investor presentation and for some reason they didn't show the company's balance sheet. Now, I don't think they're actually hiding anything. I think just due to it's an acquisition company and they're acquiring another company, I believe they haven't disclosed this information yet as it's still an ongoing process. But still, that's an interesting red flag, which means I would never load up the truck on this investment. So what's my conclusion with this stock? Well, on the positive side, they're in a growing industry. They've got a great software as a service product. They've got a great business in a box solution with high margins, high revenues. They're an established company of over 12 years, which has been profitable, and they're growing at a massive 40% compound annual growth rate. Oh, and they're going to be listed on the NASDAQ, which is very rare for these type of companies. So what about the risks? Well, first, it's a speculative company. It's a SPAC, so that's always a risk when investing into these type of companies. The second risk is the fact that for some reason I couldn't find a balance sheet for the company. Now, that is something which you need to just be aware of. I don't think they're actually trying to hide something there, though. Third reason is this federal probe. And the fourth reason is, for some reason, this delivery feature, which seemed to be a popular feature, was removed from certain parts of the platform. The share price of the acquisition company actually ran up by around 37% before dropping down to around $12 per share. Now, this could be a speculative play and could be worth a small position. Now, if you guys want to know exactly when I'm personally buying and selling stocks and also gain access to my 6-figure portfolio, then feel free to check out the first link in the description for the VIP membership group. and I'll be revealing all details on stocks such as this one in there, as I'm currently still researching this stock at the moment. But like always, this is not financial advice. Please do your own research on all the stocks I mention on this channel. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead and hit that subscribe button and turn that notification bell on. And if you found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.